Welcome to Edison TV. My name's Andy Smith.
My name's Daniel Wilkinson.
And we're two of the analysts in the healthcare team based in London. Now, Dan has just initiated on a company called Avacta, and we're going to be discussing Dan's initiation and the important points that come out of that. So Dan, what can you tell us about Avacta?
So Avacta is a AIM-listed biotechnology company. It's predominantly focused on developing its Affimer technology, which is kind of across three divisions. So it's got its therapeutics division, its animal health division, and its diagnostic reagents division. Its main focus for the next couple of years is on the therapeutics, where it's looking to move its Affimers into the clinic. Most notably, the first one will be its PD-L1 Affimer, which is looking like it should get into the clinic in 2021.
So Avacta's a platform company based on the Affimers. So Dan, tell us, what's an Affimer?
So Affimers are small engineered proteins. They're typically about 10 times smaller than an antibody. They've got kind of two main advantages in my view. They're kind of the formatting capabilities and also the kind of freedom to operate in kind of intellectual property space. If you're looking at the formatting capabilities, the Affimers are quite easily modified. So you can add on to them other Affimers, so say bispecifics, or you can add on kind of toxins, so you can do drug conjugates. And this can do it in a lot easier way than you can typically do with antibodies. When it comes to their freedom to operate, Avacta own all of the IP around Affimers. So this allows them to go after targets that kind of typically would be protected by other IP out there. So they can actually have maybe a range of applications that other companies may not be able to go after.
And Avacta's platform has generated a number of products that form its pipeline. What can you tell us about the pipeline, Dan?
So for Avacta's pipeline, it's all focused really in the next couple of years on developing their products into the clinic and getting clinical readouts. The first of these will be AVA004, which is a PD-L1 Affimer that they're looking to submit an IND for at the end of next year, with potentially phase 1 trials starting in the following year in 2021. This will kind of be the first key inflection point for showing that Affimers have clinical applications and be crucial for the company moving forward. Before that, they're looking to develop AVA6000, which is a linker that they're potentially going to use in their drug conjugates. This could potentially be in the clinic next year, and this is in development alongside their partners at Tufts University. This could be kind of combining that linker there in the AVA6000 with the PD-L1 AVA004 Affimers. They can then add a toxin on that, and then so later down the line, kind of 2021-22 onwards, they're looking to develop drug conjugates, and also maybe as well the bispecifics, which is their PD-L1 lag-free bispecifics. So I think it's all about in the next couple of years developing into the clinic, proving the individual ideas separately, and then developing their bispecific and drug conjugate platforms.
So the Avacta has generated interest from partners. What can you tell us about its partnerships, Dan?
Avacta have a range of partnerships across all divisions essentially. The key ones I'm kind of paying attention to at the moment are their partnerships when it comes to do with the therapeutics. So most recently, one of those was announced, which was the LG Chem deal, which was kind of had about $2.5 million upfront dollars, and over the next couple of years has got near-term milestones about 5.5 million, and then longer-term milestones of over about 300 million, depending on if additional programs are licensed in. Addition to that, there'll be royalties as well. And I think that collaboration there is quite interesting. At the moment, it's early stage, obviously, just been announced. But that could come up with a range of targets and could benefit Avacta quite substantially in the long term. Just as recently, they had Moderna have decided to in-license one of their assets from Avacta. There's no kind of deal terms surrounding that, but we see this as a positive movement from Moderna. And we could potentially then start seeing Moderna progressing this into clinic over the coming years, which would be a key inflection point for Avacta. Thirdly, we've got a partnership with Tufts University, which I've kind of touched on a few times already, but that's to develop kind of their drug conjugates, Affimer drug conjugates with them. Tufts University have got a kind of a cleaving kind of linker technology, which they believe is unique. And Avacta believe they can combine that with their Affimers to develop a unique set of drug conjugates. The first one of these will be a drug conjugate with a PD-L1 combined with an IDASH inhibitor with a FAP alpha linker. They're expecting this to potentially kind of start entering the clinic, 21, 22, or kind of onwards. So we'll see how that develops, but that looks very interesting at this point in time.
And what are your messages on valuation and financials, Dan?
So financially, Avacta are loss-making, as most biotechs are. We've kind of got a cash reach at the moment to 2020, so next year, at which point we'll probably look to raise more capital. They will, whether that's for funding or a debt raise is unknown at this time. However, we see going forward that their cash needs will be substantially more, just because of the R&D increase that you'd expect. However, we do see the benefit from this, as most companies benefit from valuation uplifts quite substantially when they get their products into phase 1, phase 2 kind of clinical trials. So we see any ongoing costs over the coming years as a positive for Avacta. For Avacta, we currently value them at about 51 million or 44p a share. So it's kind of a sum of the parts valuation at the moment. So we take kind of parts of the business that we kind of have quite a lot of information on. So these include the LG Chem partnership. These include the PD-L1 lag-free bispecific, and then a kind of a peer valuation of the animal health and diagnostic reagents kind of divisions. Our key driver of value at the moment is that PD-L1 lag-free bispecific, and that's roughly about kind of over 50% of our valuation. We kind of see this as kind of a part of the whole therapeutics pipeline. Obviously, there's got the not just the bispecific coming through, but the kind of drug conjugates and potentially other stuff later down the line. So we can see as they kind of enter the clinic or near the clinic, we can readdress that and maybe add some of those to our valuation, dependent on the data that's been presented.
Okay, that's all good. So what have we got to look forward to? What have investors got to look forward to in 2019 and beyond from Avacta?
For news flow, I think near-term news flow is obviously next year we're kind of looking at a few quite interesting things. We're looking at the FAP alpha linker between Tufts and Avacta, kind of that entering the clinic next year, so testing that linker to see how it works, that which will potentially kind of be one part of a drug conjugate they'll use. We're looking at the PD-L1 Affimer that Avacta kind of will put hopefully an IND in towards the end of next year, which would allow clinical kind of start of their trials the following year. And so I see those as the two big things. Obviously, there's always unexpected news flow, maybe new partnerships like the LG Chem one announced recently, that could add kind of additional upside to our current valuation and to our current assumptions.
That's it from us on Avacta for now. Please look at Dan's initiation note on Avacta and look out for the news flow and our notes that follow from that. Thanks for watching.